Hey, it's Matt with PriceActionTradingSystem.com, and it's Wednesday. It's April 16th, and for the most part um, on our chart today, we spent most of the day in the trading range. During the overnight, we had a move up. Show you a couple of things here. That's where the market opened. That was the high of the first move. Then we had the correction, and you can see from the low point to the next move, perfect measured move. I mean, that's a perfect measured move. And even this next leg was basically another measured move. And so, I mean, use these measured moves. They don't always work 100%, but it's amazing how many times, how accurate they are and how many times they work and keep you in the trade to the exact tick. They're just a guide. You don't want to trade from them, but they're just a guide, and they'll help keep you in trades. And you can see there's fairly, for the most part, there's two equal. We started out in this trading range. We dropped an equal range. You can see that right there. There's the first part, and there's the second. And we overshot it a little bit, and then when we went back, we had another equal move. And we overshot that side a little bit. Then we came back in the range and eventually broke a little higher before the close and came back, and we're trading almost right at the highs of that range again. So those are just some things I like to show that help point you towards targets and where to expect prices to go and things like that. So, but let's talk about the trades. This was really a trading range type of day, and the first trade I saw was when I came in, we were in all this mess. We had a little trend working up. We kind of overshot it, and then we undershot it, and we moved to a new high. This is what always trips people up. How do you know when this correction is over? Right here. What you have to do, first of all, you got this trend working up here, so most likely you're going to get a retest with a new high. And you can see we broke that little channel. We had a retest with a couple legs up to a new high, and then we sold off. So, and that's what's going to happen most of the time. But how do you know when this little correction is over here? Well, draw your short-term trend lines, and notice that we had a move, a close outside right here, and then a move to a new low that was lower, and then it was over. And look at that big reversal bar. Okay, had a little interruption there, but notice the signal bar. Really, this is your signal bar, and this gets kind of confusing. The first bar that breaks higher, this is the low bar of the point, so it's really your signal bar, but it's not a very good one, so you're probably better off to wait. And look at this nice signal bar here. It trades down and trades up and then closes on its very high. Just put a stop right there. Easy move up. So I like that trade. There was a second entry here, but look at your signal bar on this one. It turns out to be a doji. So it's a little risky going long right there, and you don't have a break of this channel or anything like that. So use these short-term trend lines, and that will definitely help keep you on the right side of the market. But again, notice that signal bar, how nice it is as well. Really aggressive guy might have gone long right above that bar right there, and you get a smaller stop that way too in case you are wrong. But it's better to wait on that move right there and just put you a stop there, or wait on the break higher and then put a limit order, although you might have missed this trade if you did that. There's pros and cons to being both conservative and aggressive. There's pros and cons to both of them, and you're better off in the early on being less aggressive and being more conservative, and that'll help you. And then I didn't like going long right here on this move. That's the first correction, so that's your first entry long. But it's right at the high right here. But when it pulled back again, and there's a failed second entry short. Notice this new low, first entry, pull back, second entry. So there's a failed second entry short. I like that one. There's a couple of extra ticks in there to get your easy scalp, and then it sells off. But that's what you're expecting. And you got your trend working up, you get your break, you get a couple of legs up to a new high, and then it sells off. And notice here, this is your first leg down, and then you get a 2-leg correction, and when you see that and it starts down, you're probably going to get another leg down, and you get almost a perfect measured move. If you use the closes, it is a perfect measured move, but you know, it basically overshot it a couple of ticks, but you can see that there's leg 1, and then there's a 2-legged correction. So that's a second entry short right there. This is what a reversal pattern looks like. This is a good one. You got your break, you move to a new high, and look how that went right through the EMA. No rejection at all. It just shoots right through it, comes back and tests it, continues lower, and then you get a 2-legged correction. And so that's a 2-legged pullback to the EMA, to the trend line. And I actually drew this line right here off of these. I actually had it right here first, and I ended up, you know, adjusting a little bit down to there. But even if you draw it right there, you pull it up, and when that turns down right there in that spot, you know you've probably got it right. And it's a second entry short. Notice the new low, first entry, pull back, then a second entry. And that's a nice reversal type bar. It closes on its low. Just put your stop there. As soon as that bar right there closes, that's your signal bar. As soon as it closes, drop a stop, a sell stop right there. And somebody today asked me about a stop limit order. Do not use stop limit orders because you may get passed up on those on your best moves. And if you're using that for your safety stop, it could shoot right through it and you not get filled. So always use a stop because you get a guaranteed fill on a stop. And stop limit order, for the most part in the ES, stop limit orders would probably not be a problem. But there's some markets where your stop could get passed up using a stop limit order. So I never use stop. Go read, if you're not real familiar with stop orders, limit orders, and stop limit orders and the other type of orders, go read up on that because that's important to know. And, you know, we use stop orders to enter and exit. And we use limit orders for our targets. And you have to use a limit order for your target, but you want to make sure you get your 4 ticks too for the most part. So if you could use a stop order for your exit order, but there's a chance you may not get filled with your 4 ticks. You may lose out. But again, in the ES, it's probably not that big a deal, but we use limit orders all the same. So that's a 2-legged pull back, again, a second entry short, nice entry, and then it comes back and confirms that trend line, and so you get another chance to enter right there and look at it go. You get a nice move down, and then again you get 2 legs up. So there's another second entry. That's the first break of your trend line, so there's plenty of room to get out. Notice the new low, pull back, first entry, pull back, second entry. So when that bar formed, you could just put a stop right there. This is one where it didn't quite close on its low, and it's kind of inside. It basically is inside that bar. So you might wait on the break and drop a limit order in there and try to get a little better entry, and you would have got it here. And easy scalp, and then it bounces right here. You've already got kind of a double bottom, and it keeps bouncing, and it can't get through there. And this is kind of no man's land. I probably should have circled this. Let's just do that. Notice how all those bars stack up, and, you know, it's just congestion. And so that's, you know, you don't want to enter there. So we'll mark that as congestion. Just stay out of that. There is a failed second entry short here for the most part. Notice this is a move down. You get a pullback first entry, pullback second entry. So, and it did kind of tick a little bit lower in all those lows right across there. So there's a trap. So you might have thought about going long right there. But because of all that overlap, I think you're better off just to wait and see what happens, because you're trying to make a new low. And notice we don't have one yet. And we had to go higher and then come back down and get the new low. And we made another push down to a final new low before we actually started rallying out of there. So the fact that this broke lower right here first and then turned up, if it would have gone right out the other side, I would have liked it better. But if you entered this one, this is one you probably wait on it to break higher and then use a limit order. I'm going to go ahead and just make it green, because an aggressive trader is likely to take that trade because now we've tested that low. You made the low here. You tested 1, 2, 3, 4, 5, 6, 7, 8 times, and you got that one little tick trap, and that's why it shoots up real quick. So I am changing that one to green, and then you get you come back up and you test this high, and you might have even taken that trade. Aggressive trader would probably even take that trade right there because now you've tested that high twice and it turns down, and you can see it kind of got hung up there. But then you get a failed second entry long. Now this is the new high. You pull back first entry, you pull back second entry, and so that's a failed second entry long. So you could have entered here or here. So there's really two opportunities to enter on this one. And if you waited on, this was actually, let me get this out of the way. This move up here was your failed second entry long. And then that's really a two-legged pullback with a second entry long counting off, second entry short counting off the low. Look at the new low, first entry, pullback, second entry. So you could have entered on either one of those. I really didn't like the trap as much because it's a doji and there's 3 overlapping bars. And so that's the reason I didn't really just mark them both. And just thinking about that some more, I'm probably just going to go back to that and skip that right there because there's not a lot of room to even scalp out before here. So once you got that trap, then you can see it moved pretty quickly, and we did get the new low we were looking for. And we actually pulled back and ended up making another low. Some people might have thought about going long right here, but I didn't like it because of all the overlap. There's 1, 2, 3, 4 overlapping bars there before it breaks higher, real close to the EMA. There's too big a chance we might make another leg down or might just drop a little further, so I didn't like that one. And then you get a second entry short here. Notice the new low. You're pulling back first entry, pull back second entry, but again, that's not a very good signal bar, and by the time this one forms, you're back so close here. Again, I just don't like it. There's even a trap right here. Notice the new high. Pull back first entry long, pull back second entry long. But I didn't like it because it's just not a very, there's not very, you're right here at these lows, there's not much room, and guess what? It does. It breaks lower and turns right up, and then you get a nice signal bar there. And chance to go long, and that's a failed break lower, and then it takes off. So I did like that one to the upside because that gives you, at this point, your line is down here, and notice you broke lower and bounced. And the reason your line's down there because this is where your last closes were, and you keep moving this lower, so it would have been right there, and it's just a little failed break lower. And off it goes. And then guess what? You get a failed second entry short, which is a short trap. Notice the new low, pull back, and look at this. This is what a reversal looks like. Notice how we got a little hesitation right there at the EMA, but then it shoots right on through, and look how high it goes, and it tries to go lower once, and you got that trend line working up through there. It bounces right off of it, pulls. Then you get a failed second entry short. Notice the new low. First entry short, pull back second entry short, it fails, so there's a trap. You go long right there. And then you get a two-legged pullback to the EMA. Notice the new high, first entry, pull back. That's a second entry long right there. It's not a really nice setup. This is one where if you wanted to use this for your signal bar, which that really is the signal bar, wait for it to break higher and then drop a limit order in there. If you use a stop, it would have worked, but I like using a limit order there just because it's a doji, and but it is a trap, so there's no reason you can't go long right there. It is a two-legged pullback, and of course, then once it heads higher, you're looking for a new high, but you're probably looking for a measured leg, similar to that right there, and you can see we got that for the most part. We came up a tick or so short there. And then we started working down. You got your double top. And of course, this is the high from the overnight area right before they open. And that's where we find resistance. You get a double top. Again, aggressive trader might have thought about going short right there. I think it's too risky. Um, you're better off to wait. And then you get a failed second entry long there. And you can actually count this. Notice the new high. Pull back first entry, pull back, there's your second entry long, it fails. As soon as it turns down right there, it's a failure. So just have your stop, your sell stop sitting there just in case. If it doesn't activate it or execute your order, then you cancel it, but you're always waiting and you're thinking ahead and you're ready for it. So then you get your trend line and you pull back again, and you can count this as a new high, or you can count a double top either way. That gets confusing for people, but you got a new high, first entry, pull back, second entry. And so again, a trap, just be ready right there. But you got your trend line off those first two swings, and this just confirmed it. So that makes it even stronger, and look at it go. But because they trapped some people there, it really shot down real fast, and it overshot the trend line. And you can see that. And we overshot it, and then guess what? We overshot it to the other side. You get a second entry short with a big bearish reversal bar. Notice the new low. You're climbing first entry short, pull back second entry short, and nice, quick, easy move down. And then we went into this mess, which is similar to what we had down here. So we'll need to go ahead and probably put that in the lavender stuff. And that got you into the 1 o'clock hour, and I didn't mark anything after that. But there was a nice entry right here. And this is just a little trading range. And you probably wanted to tighten that down as it got tighter. And you can see that was kind of the highs starting right about here. And so you're better off just to stay out of this. Unless you can get a real close entry like this down here, knowing you're probably going to make it back to the other side. And of course, it does go through. And you get a little trap and some other stuff, but it's way late in the day. And so if you back out and look, for the most part, it's just a trading range day. And here's just some interesting facts. We traded up into this range, and so what do the rules tell us? The odds are we're going to break out to the upside, and that's exactly what happened. And so remember that. If we look how we traded up strongly into this range, and so the odds are you're going to fail on the breakout the bottom and succeed on the breakout the top. And it may fail a couple times each way before it actually succeeds. So you can't trade the breakout. You just keep you have to wait on a breakout, pullback long, and maybe some kind of trap or something. But those are things that you got to think about and watch for and be prepared for that a lot of people miss. What else was I going to tell you about? I actually wanted to show you a chart, but another trader sent me here. And this is just the ES from today. And I'm always talking about how you have to get your trend lines right. And you can see you can see my trend line here, and then you can see his. And I'm always trying to draw them wrong, and I can't ever seem to be able to do it. But here's one. And he was asking about this overshoot right here, and then the fact that we were still in the trend. But what it is, he just doesn't quite have his trend line right. It's not holding prices. There's more of a downward trend here, and then you get the break and some attempts to go lower, but they can't get back below that point, and it ends up rallying out of there. But as you can see here, we had on my trend line, we had an overshoot and an overshoot, and we tried to go lower a couple times and failed, and so the market moved higher. But this is a good example of how you have to get your trend lines right. This is not, so far off that he still didn't find a couple of these trades, but this is more of a trading range really by the time you can see all those highs across there and all these lows. So I'd be trading that more than I would even the trend. But the trend was down through here off the first couple of swings. We're really still in the uptrend until you get this lower swing. And so that's where the trend was, and you get the break and the move down. So you got to draw these right, and you can see this one looks like he had it right. This one, he was pretty good here on that one. He's getting them pretty close until this one. So obviously he got confused, But no, during regular hours, you don't usually see something like that. You know, your trend's going to start off this last high point most likely, or either the first low point, which that would give you the little range there. And notice this is what a reversal pattern looks like. Again, notice how we got the double top and then we shot right through. There's no rejection off that EMA. Look how what happens when you get rejection off of EMA on the way down every time it came back, and we got a little bit through it and then rejection. Um, but when you get those reversals like right here, here's the first one that reversed down, and notice how we don't get any rejection. We go on through. Right here, you don't get any rejection. You go right on through. And then right here, you don't really get any rejection. You go on through and get back under it and test it a few times and then go lower. And so and then when you're swinging both sides of it, that's what a trading range looks like. And look right here, we're down below it, we're above it, we're below it, we're above it, we're below it, we're above it, we're below it. That's a sure sign of a trading range. Same thing you got going on down here. Same thing you really got going on right in here until you get this big move down. So just keep that in mind. Those are important pieces that you got to remember. And then you probably would have found a trend right up through here like so. And you got the break, the move higher, and then look, we got a correction there and we're back below the EMA again. And we can probably make this fit on both sides and get a nice fit. You can see that right there. It's fitting pretty well. And you get your break and a move to a new high, and then you're kind of selling off. So you got to get these trend lines right and these channels right. So that's real important. So I hope that made sense to the trader that sent me that chart. So, but that's going to do it for today. I'm going to wrap it up, and we'll be back to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.